When you're in the promotional part of raising capital, often because we're so busy and because we're so focused on that end outcome, we can forget the four most important principles of what it takes to actually get an investor interested in our business. Now, firstly, understand that the capital raising game is a two-sided dance, right? In the sense that, number one, we want to promote our opportunity, we want to build our profile, we want to capture people's attention, we want to capture their interest. The challenge is the person we're dealing with on the other side has also got 30, 50, 100 potential other people also trying to capture their attention and their interest. So the reality is, as founders, we've got to understand that the first step is the most important part for us. And it goes back to a simple key marketing principle, and that is AIDA. Attention, interest, desire, action. Our first job is to capture the attention of a potential investor. And then once we do that, our job is to capture their interest. So attention is fleeting, as we know. We are bombarded with so many different messages or communications throughout the day of things trying to capture our attention, whether it be social media, whether it be emails, team members, people communicating with us, etc. Right? Everything captures our attention. Interest is one of the hardest things to capture, right? Because once you capture someone's interest, that means what they're doing is they are mentally allocating time to you and your opportunity, right? And then following that, then the next step is once they've allocated that time, that interest, then how do you convert that to desire, where they want to learn more about your business and they're happy to make an action to go and whether it be meet with you, have a further conversation, do a deep dive, etc. Now, I'm always communicating that none of us are entitled to raise money, none of us are entitled to be successful, and this is an open marketplace and all players have a right to participate, right? Or not participate, most importantly. So, capturing attention. So if you break it down to the real simplest part, we've tried to, from our perspective, we see as an elevator pitch is an important part for capturing attention, right? And capturing interest. Sorry, capturing attention is the first part. Now, often the simple principle of doing that is, do you know how what we do is, right? And typically when we say that, do you know how, then we're typically isolating the problem that we are trying to solve. And then you can say what we do is, and then you can actually highlight basically how you're solving the problem. Now, that's a simple way of communicating the elevator pitch. Now, what a lot of people communicate, unfortunately, the elevator pitch is not enough, because then after that, how do you actually really capture their interest where you have got their attention, where you've got you've actually got mental time in their headspace to actually understand more about your business. Now, the area that we believe that this is most important is your capital raising brand elements. Now, after you've nailed your elevator pitch, the next thing to nail is your capital raising brand elements. These are the things which in an investor's mind, all you want them to say is, that's interesting. That's the spot. When you've captured someone's interest, in their mind, they're saying to themselves, that's interesting, right? Now, today, the way we need to do that, for some people, the idea may be enough. The elevator pitch may be enough. For 99% of companies, just to set that expectations, you're going to need to dig a little bit deeper. Now, I'm not talking 15 minutes deeper. I'm talking about having 2 to 3 bullet points around capital raising brand elements that actually really captures the interest and desire of a potential investor. Now, capital raising brand elements can either be growth metrics, right? It can be blue chip clients that you've been able to attract as clients, because that means they've gone through a procurement process. Growth metrics could be, year-on-year growth for your business, or if you're very early, month-on-month growth business. It could be your customer acquisition cost ratio. We've done another video on that, right? It could be just those financial unit metrics that are super important for an investor, which capture their attention, right? Or it just could be the sheer growth rate of users which you're going through at the moment that you're going to be looking to convert, right? Now that's getting less and less so now, but that could also still be a possibility for your area. Now, the other ones could be existing shareholders that you've been able to attract, or existing board members that you've been able to attract that are well known in your space, right? And other ones could be simple things like, say, blue chip customers that you've been able to get because of, as I mentioned, that procurement process that you've gone through. So every company, after you've gone through your elevator pitch, the next thing to capture interest, right? You can capture attention with an elevator pitch. To capture interest, have 2 to 3 bullet points isolated around that capital raising brand, and we'll put the capital raising brand card in the actual corner so you can click on that and go into a bit of a deep dive. But you need to have 2 to 3 bullet points ready to go to highlight why they should have a desire to want to have a further conversation with you, right? So let's go through it again. Basically, the 4 principles, right? Simple marketing principles is attention, interest, desire, action. You can capture attention simply via your elevator pitch. But to get interest and desire, you need to have 2 to 3 capital raising brand elements ready to highlight it, because that is the language investors typically understand. In their minds, when they tick over and go, oh, that's interesting. Why is that person involved? Wow, that's impressive they've been able to achieve that, etc. Right? Or that's impressive they've been able to attract that quality of client, for their product, right? There must be something good about them. There must be something interesting there, right? So that's why capital raising brand points are so important. And then the action part is obvious in that they want to take a next steps action with you, whether it be learn more about your business, a deeper meeting, etc. Okay, so I hope that's helpful. Go back to the old basics principles of AIDA, A-I-D-A, attention, interest, desire, action. I said, and you will note that you'll be able to attract a lot more, you'll be more successful at attracting investors to at least get to that first stage of learning more about your opportunity.